Yo, what up, everybody? This is your boy Sharaf again. Welcome back to another episode of Disruptive Investing channel. This video is sort of a continuation of my previous video where we were exploring disruption in the automobile industry with the introduction of electric vehicles. In that video, I discussed the probability of success of two rising EV companies, Fisker and Polestar. And if you haven't seen that video, I recommend you check it out. The link is provided in the description. And here in this video, we will continue with the theme of EV disruption in the automobile industry by analyzing Magna International, ticker symbol MGA, which is also an automotive company. Talking about Magna in the context of disruptive innovation may seem a little ironic, as Magna is sometimes considered as a legacy dividend-paying blue chip company which has been around since 1957 and has mainly been involved with supplying parts to the traditional automakers. But don't let that fool you, as the company is pivoting quite aggressively towards electrification and trying to build an EV-focused customer base by offering EV drivetrains and autonomous driving solutions to its customers. So, keeping up with the tradition, let's begin our analysis by providing a brief overview of the company and trying to understand what this company actually does. Magna is a mobility manufacturing company specializing in automotive parts and components. With its headquarters in Aurora, Ontario, it is the largest automotive parts supplier in North America and third largest in the world. It is involved with all aspects of building vehicles, which includes, but not limited to, manufacturing and supplying of parts for interiors, exteriors, electronics, powertrain, and automated driving systems to many of its customers, which includes the likes of GM, Ferrari, Ford, amongst many others. Since our interest is in disruptive innovation and electric vehicles, therefore I would like to highlight Magna's involvement in key EV technologies that is paving way for Magna to smoothly transition into an EV company in the future as per the market demand. The biggest thing here is that Magna is heavily involved in developing and manufacturing electrified powertrain for many EV car companies. It is developing electrified powertrain for all categories of vehicle, which includes hybrid vehicle, fully electric light passenger vehicles, as well as electric pickup trucks. On the EV side of business, Magna is also involved with building battery enclosures which protect the high voltage EV batteries inside and also provide structural stability to the vehicle. In fact, Magna has recently opened a new manufacturing facility in St. Clair, Michigan that will specifically build these complex battery enclosures for the highly anticipated 2022 GM Hummer EV. One thing that did surprise me that Magna is not involved with the assembling or packaging of the battery pack solution for the EVs, which is quite a big part of the EV industry, and I think it would have nicely complemented Magna's battery enclosure line of products. But upon further research, I found that Magna used to have a battery pack division, but it sold it to Samsung in 2015, which I personally think is a bit of a shame. The most significant line of EV products from Magna is actually its Advanced Driving Assistance System, or ADAS. As part of the ADAS, Magna builds and integrates suites of sensors such as LiDAR, digital radar, and specialized camera to enable driving automation and driving assistance features. Magna's digital radar, branded as the Icon radar, is said to be one of its kind in the industry, which can detect and navigate around complex scenarios such as recognizing a stopped vehicle inside a tunnel or recognizing different types of vehicles like trucks or motorcycles on a multi-lane highway and based on the size of the vehicle, then navigating to a safe path. It can differentiate between different types of objects as well. For example, consider a scenario where a pedestrian is walking next to a guardrail. In this scenario, its radar technology is intelligent enough to differentiate between the pedestrian and the guardrail and then take extra precaution to avoid any potential collision. Similarly, the ADAS system enhances safety of the car and passenger by scanning surrounding environment and then taking any evasive actions if the presence of any physical hazard on the road is detected. ADAS is pushing the limits of fully automated driving on the highways by being capable of performing tasks such as emergency braking, lane detection, and lane centering, which are essential for highway autonomy. Lastly, its hardware sensors and the integrated software enable for autonomous driving luxuries such as lighting automation for cars' headlight based on its surrounding, performing automated parking, and recognizing traffic light signals, which makes life a lot easier for the driver. So basically what I'm getting at is that although Magna may not be a hype EV startup company, but it still offers enough EV products and autonomous solutions to compete effectively for the market share on all fronts of the EV industry, which should be seen as a big positive sign of growth in coming years and a big positive for investors. So now let's proceed further to explore the financials of Magna to gauge if the valuation makes sense for the company. We will start by looking simply at the PE ratio. And the current PE ratio of Magna is around 15, which, although decent, especially when compared to the PE ratio of S&P 500 of 27, is not necessarily the cheapest. However, to get a better sense of the company's valuation, we have to consider the forward PE as well, which for Magna is only around 10. And therein lies the value proposition for Magna, and it also hints towards future earning growth for the company. Also, as mentioned many times on this channel, that PE ratio is a relative number and doesn't really tell you much if you only look at it in isolation. Therefore, let us compare the forward PE ratio of Magna, which is 10, to the automotive industry as a whole. You can see from this chart that forward PE ratio for S&P Automobile Manufacturing Company is around 25, which is worse than Magna. Therefore, it gives us greater confidence that Magna is indeed trading at a cheaper valuation, since its forward PE ratio is cheaper than both the auto industry and the larger market in general. And just to be really sure about Magna's valuation, let us also compare Magna against the big American automakers in Ford, GM, and Tesla. From this quick chart, you can see that in terms of forward PE ratio, Magna is at a 10.08, which is second only to GM at 8.92. However, if you compare the free cash flow of these four companies, you can see that GM is the only company which happens to be cash flow negative due to its huge debt burden, which kind of negates the positive of having a slightly better forward PE ratio than Magna. Whereas in Magna's case, its free cash flow stands handsomely at $2.5 billion for trailing 12 months, which is significant for a company of its size. Next, let us also consider the future growth of these companies through the PEG ratio. In this case, you can see at zero point 0.3, Magna is actually even superior to GM, whose PEG ratio is only 0.59. And remember, for these ratios, lower is always better. But even here, it can be seen that Magna is not the best on the PEG ratio indicator, as it slightly falls behind Ford, which has a PEG ratio of 0.16. However, I think this difference is marginal and doesn't necessarily mean that Ford is a superior company than Magna. Lastly, if you take dividends into account, only Magna and Ford are offering dividends as of now, with Magna's dividend yield being 1.93%, which is slightly better than Ford, which is at 1.59%. So in terms of value proposition, I would say Magna is comparable to Ford, and I think being evenly matched with Ford on valuation should be considered a big positive for Magna. Although, as I said, Magna is on par with Ford in terms of its current valuation. However, I do think Magna can offer better growth opportunity compared to Ford when it comes to the EV side of business, as the company is aggressively pushing its ADAS technology, which we have discussed in the earlier section, and it is aiming for its ADAS to grow at the compound annual growth rate of 15 to 20% between 2020 to 2027, which no doubt is significant if realized. In fact, Magna has recently even added 120 engineers to its ADAS division, which reinforces the company's commitment to developing the autonomous technology of the future. The reason I prefer Magna over Ford or any other legacy automaker is because legacy automakers like Ford, GM, etc. are huge companies which are embedded much deeper in traditional internal combustion engine or ICE vehicle industry. This makes it much more difficult for them to transition to EV compared to, let's say, Magna, where the transition from ICE vehicles to EVs can happen much more swiftly and quickly at much lesser cost. Also, considering the fact that a lot of parts supplied by Magna, such as body structures, sensors, electronic, etc., are agnostic to the type of the vehicle that are being produced, and that gives Magna some added flexibility and cushion in the transition phase, since their currently produced parts can be used for the EVs as well. It can be seen from the chart that Magna is expecting their EV side of business, which includes their electric powertrain, battery enclosures, and their ADAS side of business, to grow at a much faster rate than their traditional businesses, which would make Magna future-proof and would also help it to easily adapt to the changing market. In fact, you can see in the following chart that Magna's business electric division is expected to double its revenue from 2 billion in 2023 to around 4 billion in 2027, which I think is a big positive for investors. Okay, so Magna has a great future in the electrification of cars, but now, as is the custom, we have to also look at some associated risk with the company as well. And there are some risk and red flags that should be pointed out here. The biggest and the most obvious one is that considering Magna is the suppliers of parts to the automakers, the fortune of the company is highly correlated with the global trends in the automotive industry, and it follows the cyclical nature of the auto industry, especially in regards to the light passenger vehicles. This was quite evident in past couple of years as the sales and profit took a big hit for the company, first in the light of COVID pandemic, then the shortage of chips thereafter, both of which affected the automakers negatively. This can be seen from this chart where both quarter-over-quarter revenues and earnings have been declining for the company since the start of 2020 all the way to 2021. So let's get back and address our original question. Is Magna the best EV stock out there? And the answer to that question is, I would say, a maybe. It actually depends on what you want from this talk. See, obviously, as I clearly stated before, Magna is not a hyper-growth EV company which has a multi-bagger potential. So if that's what you're looking for, then this is definitely not the stock for you. There are many other higher risk EV stocks with greater potential upside that you can possibly explore. But the case of Magna as being a great stock can be made in the context of its cheap valuation while also providing a reasonable amount of growth by looking to capture a significant portion of EV market share as the whole EV industry sees accelerated growth in the future. Again, considering the fact Magna is currently largest parts supplier of automotive industry in North America, the idea that Magna can take the large piece of EV market share in coming years is not actually that far-fetched. So if you're looking for a stable, low-risk stock, which will appreciate gradually and beat S&P 500 in the long run, while also providing decent dividend, then this stock should definitely be the best EV stock out there for you. Also in this market where interest rate hike is now imminent, the so-called growth stocks are crashing pretty hard and wouldn't surprise me if they keep going down in the near future as well. So I think balancing your portfolio with a value-based EV stock makes a lot of sense, especially if you're someone who is overexposed to the growth and hype stock in your portfolio. And before I conclude this video, the very last thing, there were also some rumors flying around that Apple is looking to Magna to manufacture its cars. However, those rumors lost their buzz pretty quickly. But if they are somehow able to get the deal with Apple, you will see much higher appreciation in the stock value of Magna just by association with the Apple brand, which is something investors should keep in the back of their minds. So that pretty much concludes the video. I hope you enjoyed and found some value in this video, at least enough to help you look into the stock and research further yourself. Again, if you disagreed with my analysis or have a different viewpoint, please leave it in the comment as I would love to hear your opinion as well. And the last thing, please don't forget to like and subscribe to this channel, which is the source of my encouragement to keep making more videos. So hopefully I'll see you in my next video. Peace out.